take a look at our S&P. Welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host. Brought to you this week by my current special at the live room. You get 3 months, and I guarantee a minimum of 20 wins on average per month, or you get your money back. So anyway, and you know that I often have like 50 or 60 wins a month, easy. But anyway, it's an easy target to hit. The point is, you can work with me 5 days a week for expanded swing trading coverage as well. And we've got a members area that gives you downloadable videos captured from each session that I upload each weekend as well for you in case you miss a session. So go to 3winningmonths.com and you can get work with me 5 days a week for just $2.97 for all 3 months. So that's a great deal. Anyway, let's take a look at our broad market. The S&P is trying to figure out what it wants to do, right? We've got a relatively schizophrenic bipolar market that's headline and tweet driven. We had a kind of a shooting star yesterday, so that's a bearish. I don't know offhand. You'd have to, I'm not an expert in candles, but from what I understand from learning with Steve is that shooting stars occur at the end of uptrends. So I don't know if this counts as an uptrend. It's a shooting star type pattern. At the minimum, we can say there's a bearish upper shadow despite a rally day. So, of course, the talking heads on TV aren't going to tell you about that, but there is a headwind, a force against the bulls with the fact that we have a bearish upper shadow type shooting star. Normally, a shooting star would have to occur like up here at the top of a trend. So, anyway, the point is we have, despite a rally, we may well see that move up Monday, Tuesday, and then do a false breakout and crash at the end of the week. So I personally, I'm not going heavy long bias market. I'm still short the market with some of my inverse ETFs. I'll cry uncle, and I've been scaling out of them during this bounce up, and I'll capitulate if we get and hold over 30 for at least a couple of days. But I still think there's a good chance the market may sell down. So at least as a defensive hedge, it makes sense to be in some of the inverses in case they bounce, right? My favorites are SQQQ, and it's got a hammer, right? Hammer time. Ba, ba, da, da. It's a hammer down here at the previous low. And same thing, TVIX, the 1-year low's 12.8. It had been, or 11.8, it had been 12.7. We had a bullish engulfing here. The price that proves a long in TVIX wrong is if it loses that support line, and the previous low was down at 1170, so or 1180. So if it gets under that and winds on down to 11, I'll take my stops and cash out if it gets under 11. But these are also really good trade opportunities in case we get bounces, right? Whether you're trading TVIX or the VXX. Another favorite is SOXS. And others. Currently in our markets, directional longs possibly in our oil sector, right? UWT had a bullish lower shadow. I'm currently long UWT and a Gush to play oil long. There's numerous instruments out there like oil and OIH and others that you can do to play the sector long, but on the Iranian tanker got attacked a couple days ago, news that led to a spike in crude. So I like UWT for crude, and I'm in Gush for the oil services direction triple. So again, this had cycled from 2.5 up to 5. It doubled. It's back down at support. So a high volume pivot and a couple of green days in a row. The technical trigger for a long would be up over the 50 SMA or the 3.5. But I bought some yesterday at 285, 265. Anyway, so Gush may be good for a pivot long as well. Now, for those of you who are momentum traders, which I am too, we really good alerts for our members in instruments like SES. This is one I had called for my members long yesterday at 380. That was a brilliant call. The first time in the morning I would have done a stop out, but the second time, you can always reuse my entries later in the day as a live room members independently. This guy went from 380 and then aftermarket, it spiked all the way to 9. right? So it over doubled aftermarket. So SES was a big win for our live room members exclusively at www.tradingtheopen.com. Other charts to pay attention to. Fast has a gap up yesterday, and it's a pretty epic gap. If you look at, it's an iconic gap. It gapped from 31 to 34, ran to 36.50. Now, how much money could you make if you correctly trade these instruments? What you're looking at doing is putting on a trade with a small gap continuation. We had a big win yesterday in our live room again for Micron, and I called the long exactly right for this guy on the way up. And Micron is another good example of a small gap that turned into a big win. And again, you want to if you're a day trader, you want to not day trade the cheap under $10 stocks for the most part. SES was an exception. Each week I do cover at minimum of at least one or two of the under $10 stocks, but I caution traders that those are more for highly experienced traders like the SES chart. This average, normal, everyday trader should be instead focusing on charts like this where you got a small gap above the previous day's high on a chart like Micron or AMD or Twitter or whatever that makes sense to trade, and be provided with the specific entries and exits, exactly where to get in and where to get out in real time. And that's what I provide in the live room. But anyway, Micron was a good gapper. Another gapper was RARX. If you look at this chart, it gapped from 23 all the way to 46, a doubler. I don't know if anyone was trading that. I wasn't. Wish I was, but hey, we'll see where it goes from here. Now, usually after a gap day, you get a quiet day or a gap day or two. So Monday or Tuesday may be a do nothing or slow grind down. Maybe later in the week it even crashes and burns. This chart I would rather trade a pivot off a mean reversion. If it's you got a doji there, and if we get down to say a mean reversion would actually be around here. But anyway, if we sell off and plummet Monday, Tuesday, Wednesday, and then bounce say Thursday, Friday, that would be the better play. I'm not going to chase it and buy up over 47 or over 50, but anyway, these charts are out there. And like Ameritrade, when I bought it a couple days ago and then sold it back, I should have held it. One of the things you want to do in our current markets is make sure that you're focused on big money trades where you've got the outlier charts with the strongest price action and volatility, and leave all the secondary and a wannabe B-grade trades alone. Rockstar charts only, now more than ever. If you're a day trader, make sure that you are not, in general, trading crap under $10 a share. You want to trade stuff $15, $20, $30, $40 a share that has more consistency to it. Because otherwise, I inherit so many hundreds of traders in my live room from these pop and drop momentum chat rooms where they're young guys under 40 saying buy a $3 stock with thousands of shares. And that's just gambling, and that blows up people's accounts. That's stupid. What you want to do instead is focus on charts that have relatively good, consistent breakouts. So whether extreme oversolds that are trying to bounce or extreme breakouts that are trying to move to new highs like our Micron chart yesterday did, there's something for everybody in our current markets. Let me ask a quick question. I always ask this because I got so many of you here up at, not yet at 5,800. I remember when we were at 5,500, I was happy. We're going to be at 6,000. The room on the limit is 10,000, so it'll probably take a few more years to get there. But anyway, how many of you are day traders? How many of you are swing traders? How many of you do both? Type in right now, either if you're lazy, not lazy, if you're low energy because it's a Saturday and you haven't had your coffee yet, type in the letter D or S or B for either day trading, swing trading, or both. Or if you got a little more energy, type in the word day, swing, or both. I'd love to hear what the ratio is. I always like to ask because it changes from time to time. Hey Mukesh, I tried negotiating with Fidelity to get asked if there's a rebate on the commission. They said no, but I tried. Question from Mark, how's, oh wow, okay. Hey, thank Fernando, Mukesh, Mira, Naresh, Stephen, Phil, Chris, Sue, John, Pat, Eric, Lynn, Murray, Ben, Mark, Alexander, William, Eric, Long, Larry, Frenchie, Scott, Paul, they're just scrolling by. Eyeballing the data, looks like we're still both in swing is kind of dominant. A question from a trader: how's the zero commission going to affect market volatility? I expect it's going to blow it out and make it even better for us, right? Because think about it. You're going to have all these new traders out there that are saying, well, no commission and no minimums to start the account. What a deal, right? I wish I could get back the many thousands of dollars I spent on commissions, right? But anyway, with zero commissions, that's a smart question. We're likely to see more volatility and enhanced trading opportunities. Now, what's really exciting, what I'm personally looking forward to making a lot of money with, is there are going to be a lot of new traders that don't know what the fuck they're doing. And they're going to be really easy to trade against. Now, a famous penny stock trader correctly says, a good point from Tim is that a lot of people that trade penny stocks are not exactly the brightest, sharpest Wall Street minds, because penny stocks are usually traded by people that aren't exactly rocket scientists. And that's a valid point. What I like about now is that breadth and depth-wise, we're likely to see a lot more inexperienced, not knowledgeable people enter the market with their money, which is good. It's like when I go to Vegas and I play poker championships. It's like, give me your chips. I'll take your chips and, at least cash at the end of the tournament, if not win it. As traders, this is a golden opportunity to trade, because you're going to have a lot of new traders coming into the market that don't know what the heck they're doing. So it's a really good, we can trade against them and potentially make a lot of money. So it's a golden era to trade. But you've got to be on the right side of the right kind of charts, whether you're trading the little more pricey ones like Micron or the cheap ass stocks like SES. So much money to be made. And I love making money, and I love helping traders make money. It's win-win for all of us, right? No BS. No fakery or phonery or puffery. It's all honest. So anyway, really good trade opportunities. Anyway, keep an eye on the sector, or I should say commodity-based. Keep an eye on instruments like UWT for swing trades. Keep an eye on our highly volatile, highly tradable semiconductors have been strong lately, like Micron and AMD. We've got gappers like FAST, gap up continuation. This is a classic pattern. Now, I didn't get this one yesterday. I don't think I did. No, that one I missed. I'm not going to get them all, but we'll be on top of it next week. Small gaps of less than 10%. And if you have my How to Trade Gaps downloadable video course, which if you have not ordered it yet, be sure to order it. Go to www.tradingvideos.com. One of my many hundreds of sites in my empire. I'm an army of one. I kick Wall Street's ass. Anyway, tradingvideos.com. Lots of courses there to take a look at, as cheap as $27 or $47. So you can get started and see how great they are, and then buy a bunch of them like most people do. But anyway, in my How to Trade Gaps best-selling course, it's one of my top 3 bestsellers. I teach that small gaps of less than 10%, that's the critical intel. So a $30 stock that gaps less than $3, a $40 stock that gaps less than $4, $20 stock that gaps less than $2 up. Really good play for continuation. Okay, and you want to try and trade things like this, like runs 34 to 36. Combine that. We combine that for my members in my live room. And we use key metrics like whole number support and resistance. Now 34, 35, 36. A 2-point window within which would have been reasonably easy to get an open range breakout trade during the first ORB here, open range breakout. That ran a couple of points. Now, how the heck are you going to be on top of that in a timely manner? And the answer is, you should never, as a day trader, try to hotkey into trades in and out. That's what morons do. That's what young traders that don't know any better, they treat it like it's a game of Half-Life or Battlefield or Call of Duty or something like that. It's not a video game, though there's probably some commonalities. Instead, what I advocate that all traders do is use buy stop orders set ahead of time in your brokerage account. So that way, you know it's a good candidate. And let's say you put in 34.7, which would be a typical long trigger I'd issue to my members before the bell. You have a buy stop 34.7 order. So that way when the guy spikes up, you're not trying to scramble and hotkey in like a moron. Instead, your broker does the heavy lifting for you. Oh, I like working out. I like playing tenor sax. It's fun. I like having a wife from Japan. It's kind of neat. An interesting life I lead. Anyway, the point is use buy stop orders every time you're looking for breakouts. And that way you don't have to scramble and be on the edge of your seat as a day trader. It's much smarter and more sensible to have a easier to follow consistent approach. And that's what I teach in the live room. So anyway, those kind of charts make for really good exceptional trade setups. Another quick tip, by the way, and this is vitally important. If you're going to make it as a day trader, I've been day trading since '99. I'm a veteran, a top day trading educator in the industry. I'm not all over social media like I should be because I've got a life. I don't understand. I mean, I guess I do respect the work ethic of the young guys who are out there constantly throwing up stuff on Instagram, but I'm not that guy. I'm a real trader, so I'm busy trading and teaching. I do not post a lot of YouTube videos every day or hundreds of Instagram posts, though that's something I need to outsource, so at some point I will. But the point is, instead, what you want to do is focus on the strongest directional plays that are most likely to make you as much money as possible without being stopped out. And that's what I like to teach, are those kind of charts that actually make sense and keep you on the right side of your trades. Also keep an eye on UGAZ, and that's one of the picks that my Swing Scans members will get some intel on. What I like about that chart is the fact that it's almost but not quite a bullish engulfing. If you take a look at the daily candlestick chart, you can see, can't see anything on that. Here you can see almost an engulfment. We had a bullish engulfing here for sure that failed, the failed bullish engulfing. It ran up to the 50 SMA and then crashed and burned. Sell, sell, sell. Epic fail. But because the volume is high and we're at a key support level in UGAZ, we're at a key support level after a big run-up. It makes for a good pivot play. And I'm long you guys here from the mid-13s. Anyway, the point is, it may well make sense for a bounce. You want to rebuy into previous strength. So for example, my favorite pivot play is a gap up that fills the gap to the previous day's high and then makes a hammer or bullish engulfing and pivots off of the previous day's high. That's my favorite bounce trade, pivot trade. Similarly, buying for swing trade, we have all this previous strength where this guy almost not quite doubled, but actually did double. It went from 12 a share up to 24. Rebuying previous strength to kind of price project out on the right side, another leg up potentially. So UGAZ, another good one to pay attention to. So solving the market puzzle like this intelligently, one step at a time, is what I specialize in. I hope that I can be of help to you in your trades as well. I'm sorry I can't answer all the questions. I got too many of you here to be able to do a good job of answering dozens of questions. Hey Pat, saying an options trader had a blast with Apple yesterday. Well, good. Hey John, I don't know if Ameritrade charges for options. Yeah, Chris is saying sharks eat little minnows. That's true. And if you're on the being eaten side of it, like I've been for years, what you learn is defensive trading. Small share size is key. Tight stops is key. You want to play ball in the safe end of the pool, the 2 or 3 foot. You don't want to be in the deep end of the pool with veteran traders because you'll just get eaten alive. It's like going to play, a 50-100 no limit hold'em tournament in Vegas. Unless you've got years of experience like I do, you just get eaten alive by the experienced poker players. So as a trader, you want to start small. Trades under 100 shares should be your default setting. That's what I do. Even after 20 years, I still start really small. That lets me trade thousands of trades and when it doesn't work out, it doesn't cost me much. When it does work out, then I can scale in and add to the winners. And for all the 50% plus time that I get stopped out, it doesn't cost me much because I started off really small. And so do that, be a defensive trader, especially in our current markets. Oh, thanks, Andy. Good to hear it. Thanks again for the great advice on breakout trading. It works. Cheers. Yeah. The key is you got to combine great charts with great trade management and very conservative, ultra risk averse. When you're wrong in a trade, it should always cost you less than maybe $50 or $100. If you're taking stop losses of over $100, Stop the madness. Buy, buy, buy. No, don't be that trader. Trade small, trade incrementally, trade safe. That's what I teach. That's why I've been so popular for 20 years, is I'm not like these kids saying, oh, let's day trade 5,000 shares of a $3 stock and hope I can get 20 cents on a bull flag gap and go run. That's going to blow up your account. That's why I inherit so many people from these other places that are bullshit. So yeah, Paul, I'm still long TVIX, but I've been scaling out on the way down and then buying on a pivot. So I'm still directionally looking for a bounce in TVIX. Hey, thanks, Vincenzo, saying you can take on Wall Street. Hey, you too, Brian. Have a great weekend, man. Yeah, Mike, I just covered you guys. Good question. Is there a formula for the spread on a buy stop order? I don't know what you mean by spread. I trade instruments that have lots of volume, at least 15,000 shares a minute or a million shares a day on average, so that the spreads of what I day trade are always less than a penny or two. That's another reason to avoid the low float under $10 stocks, because they may have spreads of as big as a nickel or something, which will eat you alive. Or the FANG or Match or whatever, MAGA stocks, whatever the talking heads are talking about. I don't day trade Facebook or Apple or Amazon or Netflix or whatever, because the spreads are going to eat you up. You want to use 1 penny spreads and use buy stop limit orders. The limit is usually a nickel. So if I buy, a typical order would be, let's say if I were to buy this guy, you guys, on Monday, I would likely buy something like, I put my alert, again, not a trade alert, but where I'll be looking to trade personally, would be, say, a buy stop 13.6, limit 1365 order. And that should solve this if it doesn't gap over that pre-market. So we use a nickel spread on the limit order. Hey, Fernando, if I have an opportunity to move to another state, city to day trade, what should I recommend for internet to Wall Street? I like here in Colorado Springs. It's a great #1 rated mid-sized city in the country for many years in a row. Very conservative, very honest, very right-wing, ultra conservative, family-friendly, type of a place. Other cities that are good, Santa Barbara is a nice town, and what else? Beware of the current big waves and current. Right, Mukesh. Oh, thanks. Appreciate that. It's a great teacher with practical advice and examples. Okay. Anyway, that's my random thoughts for today. I hope that it helps all of you make bigger winning trades more often. My mission in life is to teach you how to tell the difference between charts and trade setups and methodologies, the approach to trade management and risk management that can help make you potentially more successful in your trades. The first thing you got to get rid of is big stops. So don't ever learn from anybody that advocates stop losses or post stop losses in their account of $500 or more or something. That's just bananas. Don't trust anyone who has stops of over $500 unless they're a Wall Street hedge manager trading millions of dollars per month worth of order flow. But for the rest of us, you want to have your stop losses, under $100. Make them really cheap and trade more often. Like Sosnov correctly, brilliantly says, trade small, trade often. I wish I'd come up with that. That's the most important thing that you will hear in life as a trader is trade small, trade often. So thanks to Tom for that. I've said for years, trade wide, not deep. And it's the way of saying the same thing, but he says it better. But the point is, trade a lot of stuff to a lot of darts. When you're wrong, which you will be, even after 20 years, I'm still wrong more often than right. But my stops are so tiny. My biggest winning $1,000 days, I may have, 15 trades, maybe 18 trades, of which maybe 10 are little itty bitty stops. And I fish around for the optimal entry and I retry until I hit it. And the goal, and then once it runs up, you tighten in a trailing stop to lock in the profit. And the goal is to have the profit on that trade outdo the aggregate cost of 2 or 3 attempts in small stops on the way to get the right trade. So, let's say you try a bounce here and you get stopped out. You try another bounce here, you get stopped out. You try again, and now you got a big winner and you sell the 13 and you're in the money. That's the right way to day trade, is in and out several times. You're very seldom going to get the trade right from the get-go. Usually you'll get a false breakout, then maybe a a scratch trade, and then the one that puts it all, the third trade, may be the charm and puts it in the money. And maybe you have fourth and fifth trades or stops, and the fifth trade's a break even. But the sixth trade, maybe a small win, so now you're at scratch on that last rack of trades. Look at your trades, kind of final thought here, because I got to run for swing scans. Make sure that you look at your trades in terms of a sequence of trades, or a rack or a set of trades. It's very intelligent, very smart, very professional approach. And in my institutional clients, I've had market makers and Wall Street specialists and hedge fund managers and some really, really big traders. I remember speaking at the Money Show event at the Marriott Marquis in New York, and a trader is telling me, how many millions worth of order flow he does a week. We got everything from that down to traders who are new with maybe a $2,000 account, where they're looking at how to grow that small account incrementally over time. And one of the reasons why I've earned the trust of so many tens of thousands of traders over the last 21 years is because I like to teach a very conservative, very risk-averse, very be cautious and take a lot of shots. So when you're wrong, it's okay to be wrong a lot as a trader. You will never in life as a trader be right consistently over 50% of the time. I've traded millions and millions, as much as 4.9 million worth in a single year worth of trades. We don't care. Ask any SIBO floor trader in the Chicago pits. The number of stops is irrelevant. What matters is net profit. So if you're wrong 70% of the time, but you still make money, that's great. And you should expect that. That's what I call my 30% rule. How do you, as a result of your careful position sizing and trade management and itty bitty tiny, kind of like the great movie Aladdin, enormous power, but little itty bitty tiny living space. Well, as a trader, you got enormous profit potential, but you got to get there with little itty bitty stop losses. Does that make sense? So that's what I teach. I hope this has been helpful. Y'all have been great. Thanks for being here, and I will see you next week, same time, same channel. Trade smart, trade with passion, trade with itty bitty stops, trade carefully, and let's go get them. So I'll see you guys next week. Thanks for being here. Oh, thanks, Mira. Good for the heads up. All right, well, swing scans coming up next. If you're a swing trader, be sure to go to www.swingscans.com. That'll take you to a page inside my Trade Mastery site. If you're a day trader, be absolutely sure, this is called the call to action, that you go to 3winningmonths.com or tradingopen.com/3winningmonths. And you can join for 3 months for just $2.97. So that's a bargain. You're getting me every single day from around 8:45 to 10:45, but minimum 9 to 10:30, guaranteed 5 days a week. So that's 5, 6, 7. So I want to say 7.5. So that's 30 hours of training per month, or 90 hours of training with me in live markets. And I answer questions. I'm very friendly, very professional. If you have a chart you'd like me to pull up live in the markets, feel free to ask, and I'll be sure to do that. Some of our biggest winning trades have come from my members. We got so many hundreds of folks who are really smart that I've trained over the years, and it's a good community. So anyway, do join at tradingopen.com, and I'll see you guys next time. Bye for now. Take care.